Okay, look, I just went on a run and I'm like, I don't need to make another video today. I've done enough work. It's been a headache of a day. And then, oh my gosh, on the Bloomberg terminal is something where I'm like, oh, this could potentially be some of the reason why we have so much dislocation and pain everywhere. See, people wonder, why is it that crypto collapsing affects stocks? Well, it's not just those two, it's also bond values collapsing, pension funds nearly collapsing in the United Kingdom, and now this. Look at this notice that was on the homepage of the terminal, okay, for this company. They do real estate bonds, okay, like mortgages. So basically they're a fund. And what they do is they say, hey, you know, like basically, hey, you invest money into us, you know, give us, I don't know, $50,000 or whatever, and we'll go use that to go buy mortgage-backed securities. Mortgage-backed securities are basically bonds that are backed by little IOUs from individual investors, so or homeowners. So if you have like these 4 homeowners here, let's just say, and I'm greatly simplifying this obviously, and each of these homes is worth $500,000 of loan value, let's say, then this is a $2 million pie right here. And then if you have 40 of these $50,000 people, you just slice this up into 40 little slices, right? And then now you have mortgage-backed securities, and maybe each of these is yielding, I don't know, when these mortgages were made, maybe they were yielding 4%. And now the value of these mortgages has plummeted, the underlying value of them, because the Canadian real estate market is starting to collapse. In fact, the New York Times was suggesting that Canadian real estate values between 2 months was just like a terrible drop. I was just reading about this too, which is crazy. So here's an Ontario real estate market update. And in Canada, they say prices for single-family homes in Toronto, which is in Ontario, fell by 16.4% between February and August. Look at this right here. New York Times. Look at that. Prices for single-family homes fell by 16.4% between February and the end of August. That's 6 months. That's an annualized rate of a 32% decline. So like by next year at this time, real estate in Canada could be down by over 30%. That's remarkable. So when real estate falls like that, then the underlying value of these homes is less, which means the security part of mortgage-backed security is actually less. Therefore, the value of the bond goes down. The yield to new investors, the interest rate goes up, but the value goes down, which is a problem because anybody who's invested in this is like, hey, I want some money to go buy some stonks that are on sale. And then the company's like, yeah, the value's gone down a lot of these. And then people are like, I don't care, give me the money anyway. And they're like, okay, here you go. Well, now it's gotten so bad that this company that has like, I think $100 million AUM or whatever, hey, Househack maybe will have as much as them soon. Now, we're sitting pretty with Househack. We're doing really well because we're just sitting on cash. We're just going to sit on our hands and wait for all this drama to unfold in the real estate market. So yeah, I'm probably a little bit biased when I see stuff like this, but it's like, it sucks for them, good for us. But anyway, listen to this. The dislocations created in the North American real estate markets and the volatile economy are so bad that they had to institute this thing called a runoff pool to basically like in small increments give money to investors who are demanding immediate liquidity. But the problem is the fund is like, but this is like the time maybe to buy some of these mortgage-backed securities or sit on cash to be ready to buy some of these. And so we want to make sure we have adequate resources to be able to go chase the opportunities we have. And so this company is like, okay, well, let's just give fewer redemptions to people and kind of make people wait their turn. Well, apparently, that did not help solve the problem. And here we are. This letter was just published in Bloomberg today, which is the 9th. I don't know if this just sort of like was leaked or whatever, but the letter is apparently dated yesterday. Who knows? Maybe they sent it at like 11:59 p.m. yesterday. But anyway, look at what's happened now. It was anticipated that a reduction in redemption demand to manageable levels would provide some leeway, allowing the company to navigate through these market disruptions. So in English, hey, we thought that our program would let everyone relax and stop demanding money back. And what actually happened was the institution of this program did not dampen redemption activity. And all of a sudden, people aren't paying off their loans anymore on these underlying homes. So not only are investors not demanding less money back from the fund, but now the people who own these homes aren't actually paying off their mortgages, probably because interest rates are higher now. So why would you refinance and pay it off? Why would you sell when home prices are so much lower? But on top of that, it's entirely possible that people just stop making their payment at all. In fact, that's what the Bloomberg mortgage or article was talking about. They were saying that they're temporarily going to stop distributing or providing redemptions because people are just not making their payments anymore at all. It literally says, the Canadian real estate lender Romskin whatever, this company here, Investment Corp, has halted redemptions on its largest fund after a number of borrowers stopped making payments. Dude, this is like, we're turning into freaking China over here. That's what's happening in China. In China, people are like, real estate's falling so much, let's just, stop paying our mortgage. So the company then says, well, people stopped paying us and investors still wanted redemptions. So now we're just like, and don't worry, everything's fine. Kind of like FTX, everything's fine. We're just going to temporarily defer people's ability to get their money out. It's not going to be temporary because you're probably going to go bankrupt. But I'll tell you, the odds of you going bankrupt statistically is way less if you're a member of the courses linked down below, especially 0 to millionaire real estate investing. Okay, I'm just kidding. I don't have any statistics for that. I believe that's true because why would you not want to study real estate investing during this kind of environment? If you're wondering like what course to start with, if you want to learn how to make money on this next crash, house hack exactly what we're going to be doing, 0 to millionaire investing. Join me in the real estate analysis live streams as well. You want to make more money with a side hustle? Elite Hustlers University. You want to make money in property management? Property management course. Okay, you get the idea. Use that Black Friday code linked down below. Expires Friday. All right, we're confident given some time these transactions will be completed and that the underlying value of the fund's assets is something that they remain confident in. However, there are uncertainties and trustees may be compelled to institute other temporary liquidity management measures. Dude, they're effed. They've been in business for 50 freaking years, and they're effed. This is crazy. This is crazy. I mean, maybe they're not, like, full effed, okay? Like, I just want to be clear. I don't know if they're going bankrupt. Just saying. It sounds bad. It's probably an issue you're going to see less of in the United States because we have like 30-year fixed rate mortgages, but I know bond funds are having pain as well. But what it sends you a signal of is, hey, why is everything falling and almost seemingly disconnected from fundamentals? Because there's no money to buy. Like, people are selling stuff to just be able to do what they want to do for their business or their end of the year tax purchases or whatever they got to do. So there's not a lot of buying pressure because people are out of money. It's crazy. And so then they call up their fund. Dude, I'm tired of these mortgage bonds. Give me my money back. And they're like, dude, the people are not making payments anymore. And then the investor's like, now I really want my money back. Give it to me. And they're like, no. Well, damn. All right, folks. See you later. Bye.